Ladies and gentlemen, you have connected to the Dilip Buildcon Limited Q3 conference call. Please stay connected. This call will begin shortly. Ladies and gentlemen, you have connected to the Dilip Buildcon Limited conference call. Please stay connected. This conference will begin shortly. Ladies and gentlemen, good day and welcome to the Dilip Buildcon Limited Q3 FY23 results call hosted by Axis Capital Limited. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jiten Rushi from Axis Capital. Thank you. Over to you, sir.
Thank you, Darwin. Good evening, everyone. On behalf of Axis Capital, I would like to welcome you to Q3 FY23 earnings conference call of Dilip Buildcon. From the management, we have with us today Mr. Devendra Jain, Executive Director and CEO, Mr. Rohan Suryavanshi, Head Strategy and Planning, Mr. Sanjay Kumar Bansal, CFO. We also have with us Investor Relations team from Accenture. We thank the management for giving us this opportunity. We shall begin the opening remarks from the management, followed by Q&A session. I would like to hand over the call to the management for opening remarks. Thank you, and over to you, sir.
Thank you, Jitenji. Good evening, ladies and gentlemen. A very warm welcome to all of you to the third quarter FY23 earnings call of Dilip Buildcon Limited. It's my great pleasure to be able to present to you guys. The earnings presentation was uploaded on the stock exchange. Hope you all had a chance to have a quick glance at the same. I'll take you through the key highlights for the quarter for the next 15 minutes or so, post which we will take Q&A. But before I begin, our standard disclaimer. The presentation that we have uploaded on the stock exchange today, including the interaction in this call, contains or may contain certain forward-looking statements concerning our business prospects and profitability, which are subject to several risks and uncertainties, and the actual results could differ from those in such forward-looking statements. So having said that, let me begin. So first, let me talk about the Indian economy and the broader, outcome. So Indian economy's pace of recovery has been better as compared to the global peers, despite headwinds such as high inflation, monetary policy tightening, rising interest rate, and the Russia-Ukraine war. We continue to remain the fastest growing economy among large economies. Reserve Bank of India in its latest report has estimated GDP growth to continue to remain above 6% for the Indian economy. So this is a very strong performance in our view, given everything that is happening globally. However, rising inflation, which is a global factor, has also led RBI to increase benchmark interest rates cumulatively by about 250 basis points in the fiscal year 2023. So this obviously impacts the economy in general. Moving on, the big event that has happened recently is the Union Budget. In the recently announced Union Budget, Indian government has announced the highest ever capital outlay for infrastructure at rupees 10 lakh crore. This is about 3.3% of GDP and is an increase of 33% versus the previous allocation in FY22. This shows the commitment and continuous focus of the government on the infrastructure sector. Ministry of Road Transport and Highways was allocated about rupees 2.70 lakh crores, while Railways got the highest ever outlay at 2.40 lakh crores. Defense and infrastructure got about rupees 1.6 lakh crore each, and Rural Ministry got about 1.6 lakh for increased infrastructure development, while border infrastructure got rupees about 23,000 crores or so. So for railways, the budget allocation has increased about 72% from the previous year, while for roads, there was a jump of about 35% versus last year. An increase in the capital expenditure on the infrastructure investment as announced by the Finance Minister in her budget speech will go a long way in creating more opportunities for the sector across roads, bridges, houses, buildings and other infrastructure contracts. This, in our view, also paves way for a very strong order pipeline and awarding activity for many quarters. With all-time high tax collections, stable fiscal deficit, credit ratings, we believe that the government will find enough resources to invest into infrastructure. Revenue-generating assets like fast-tag collections have also been strengthening the hands of the government. Fast-tag collections have consistently improved from about rupees 7,500 crores in the first quarter of FY22 to about rupees 11,300 crores in the fourth quarter of FY22. And in FY23, we have seen that the quarterly fast-tag collections have been more than rupees 12,000 crores every quarter in the first 9 months of this fiscal year. So improved toll collections, which are very critical for fast monetization of road assets by the Road Ministry, and are great for the government to shore up their finances. This is also helping the companies who are looking to monetize on their existing toll assets. Besides this, on the input prices, good news is that inflation has slightly subsided, while raw material prices have continued to soften, but still we are yet to see the normalized price levels across raw material prices. Aluminium price is now down 10% versus last year. Steel prices have remained stable in the third quarter versus second quarter, but overall steel prices are down 20-22% from April levels, but still up by 10% versus last year. Overall, cement prices have also been one of the highest in so many years. So while most contractors have seen the positive impact of reduction in input costs in the second half of FY23, we continue to wish for more reduction in input prices. On the project award momentum in the sector during the third quarter, project awarding by NHAI picked up speed as we saw more than 1,500 kilometers of work were awarded in the third quarter versus about 800 kilometers of work in the first 2 quarters of the financial year. So this amounted to more than rupees 33,000 crores of project award in the first 9 months of the fiscal year. However, there is a lot more that needs to be done because the government's target was about 6,500 kilometers of work, and so which means roughly about 4,000 kilometers of work still need to be awarded. While there is a healthy pipeline of orders which have been floated by the government, hopefully a lot of them will see them materializing in this quarter. On the other hand, Ministry of Road Transport and Highways has also constructed about 5774 kilometers of national highways up to December 22-23 as compared to 5835 kilometers constructed up to December 21-22. So construction there is while slightly lower than last year, but roughly about the same number. The awarded figure for MOTS is about 7,200 kilometers plus compared to about 6,100 kilometers during the same time in the previous year. Now let me talk about the performance for the third quarter of FY23. Our order book has increased from rupees 26,539 crores. It has increased to 26,539 crores from rupees 26,338 crores at the end of September quarter. We had received about 6,817 crores of orders in the first half of FY23. We are happy to say that in the third quarter, we have received letter of acceptance for more than 7,500 crores of projects, and this bodes well for our execution going forward. We are also happy to inform that we've been declared L1 bidder for Rewa Jal Nigam project worth rupees 1947 crores in quarter 4, and we have received letter of acceptance of Bengaluru Vijayawada project worth 1373 crores. This now takes us closer towards our full year target of rupees 10 to 12,000 crores order inflow guidance that was given in FY23. We look forward to our fourth quarter with very high optimism and feel comfortable with our order inflow guidance. Our execution strength was also reflected in the Rewa City project in Madhya Pradesh, where we were awarded early completion bonus. So, all these details are available in our presentation in depth. Happy for all of you guys to look at it. Now, let me please pass on to our CFO for comments on the financials.
Thank you, Rohanji. Good evening, everyone. I welcome all our partners to the call of this quarter. Let me present the results for the quarter 3 of FY23. Firstly, the revenue increased by 8% in quarter 3 FY23 and 12% in 9 months FY23 YOY basis. This is mainly due to better executions of the projects. The EBITDA margin increased from 0.29% in Q3 FY22 to 10.50% in Q3 FY23. The EBITDA increased by 39% in 9 months FY23 in absolute terms on YOY basis. Finance costs decreased by 14% in Q3 FY23 and 18% in 9 months FY23 on account of reduction in outstanding debentures, term loan, and additional working capital facilities. The company registered profit of 795 million in Q3 FY23 vis-a-vis loss of 967 million in Q3 FY22. This 182% increase on YOY basis is on account of better EBITDA margins, lower finance cost, and profit on account of divestment of 4 HAM projects to Sremenvit. On 9-month basis, DBL registered profit of 1,635 million vis-a-vis loss of 890 million in 9 months FY22. This is on account of higher revenue, lower finance cost, and profit on account of divestment to Cube and Sremenvit. Now let me take you through some important items of the balance sheet. The inventories as on 31st December 2022 decreased by 112 million vis-a-vis 30th September 2022 and 753 million vis-a-vis 31st March 2022. The debtors as on 31st December increased by 3,063 million vis-a-vis 30th September 22, and same will be realized, the increased debtors will be realized in quarter 4 FY23. There is increase of 10 days in working capital days vis-a-vis September 22. This is mainly due to increase in debtors days. However, it is at the same level of March 22. The net debt to equity ratio marginally decreased on 31st December 22 to 0.58 times from 0.63 times as on 31st March 22. Here I would like to highlight that the company is continuously on track of reducing debt on quarter-on-quarter basis since last 2 years. Cash generated from operating activities stood at 2,285 million during Q3 FY23 and 4,743 million during 9 months FY23. Thank you once again. Now we can open the floor for the Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shravan Shah from Daulat Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, a couple of things. First, on the revenue front. So, in terms of the 10,000 crore revenue that we were looking for the FY23, so just wanted to recheck. Are we able to do that because we need close to 2,700 crore revenue in Q4. So just wanted to check on that first.
So, Shravanji, as guided in the past calls, we are very close to the guidance given. We are almost on the guidance given. So yes, you are right. We are around 10,000 crore revenue on full year basis.
Okay. Second, sir, on the EBITDA margin front, so there from the last quarter Q2 we had a 11.6%, and now again it has came down to 10.5%. So for 9 months we are at 9.9%. We were looking at 12 to 13% for FY23. So for that we need a significant improvement in margin in Q4. So how much now are we looking at for the full year margin, and maybe you can help us with the fourth quarter how much we are looking at, and at the same time in terms of the FY24, because the past old projects, last time we said that most of the projects is 90-95% is completed. Then in this quarter on QOQ basis there is a decline. So despite there is an improvement in the top line. So just wanted to understand on that front.
So in terms of the EBITDA guidance, yes, we are a bit below the guidance given, but on full year basis we will be close or around 11% on full year basis. In terms of the FY24 guidance, on revenue side we expect around 10 to 15% increase, and EBITDA we are basically targeting, or we will be around 12% EBITDA. So basically this is our guidance as on today for FY24.
So, Shravanji, are you on the call? Can you hear us?
Yeah, I can hear us. I can hear you.
I think we have answered all issues, the guidance part.
Yeah. No, just wanted to further understand, is there any specific reason why now we are only looking at 12% or for the next year as a whole also, because now the old project should not be the issue, and whatever the new project should be, we should be able to get 13-14%. So just wanted to more clarity why we are now only looking at 12%.
So there are the two, 3 things. First thing is that as you know that now the bonus is got eliminated, because now the timelines are so stringent that it is next to impossible to get the bonus. So that is the first thing. Second thing, if you will see, there's the fuel prices and material prices is still not decreased at that level which we were expecting. So right now for this, you keep the guidance of the 12%, and then we will come to the Q4. we will see that whether we can increase.
Where will be reaching?
Okay, got it. Third, on the debt front, it's good that at least on QOQ front, we have been able to 136 crore reduction on the gross debt front. But we were looking at close to 400 to 500 crore reduction in this second half. So we need at least the same kind of a 300 crore kind of a reduction from here on in the fourth quarter. So can we do that?
So Shravanji, yes, you are correct. So we have given around the guidance of the 400 crore reduction. So we are close to that, and we will be reducing around 200 crore in the FY23 financial year. So around 200 crore reduction will be there, and we will be the 2,400 crore net debt as on FY23 end.
Okay, so 200 crore from the March 22 we will be reducing.
200 crore from this level. So this level is 2,600 crore. From this level, we will reduce further 200 crore. So cumulative, there will be reduction of 350 crore vis-a-vis March.
Okay, got it. Second thing, just wanted to understand, Surat Metro CS 5,061 crore project we received, but it is not part of the order book. Is there any specific reason for that?
Yeah, so because this has been received in the JV, so our JV partner will be executing that project. That is why we are not included in the order book, and we don't want to distort our order book.
Okay.
Metro and Surat Metro, which we have received individually, we will be executing that.
Okay, got it. And on the working capital front, though definitely QOQ it has increased, but 89 days it is same as the March. So how much more reduction? But you mentioned that the data we have received in January. So 80 days we can look at by end of March.
Yes, surely.
Okay, good. Lastly, on the capex front, definitely it's not significant for us, 55 odd crore. So for full year, how much? Fourth quarter, how much more we are planning, and for the next year, how much capex are we looking at?
So for the Q4, we will be doing around the 10 to 15 crore capex. So it will tally to the around 70 crore, and for the next year, it will be around 50 crore capex, which will be the kind of special equipment like for the metros and Jal Nigam and Jal Mission, that's all, and replacement, 50 crore for the next year.
Okay. Last on the bid pipeline front, sir. So how much more now are we looking at, and in terms of because this is the one issue where all the players are facing not able to get the orders, particularly from the NHAI front. So just wanted to understand. The pipeline is there, but in terms of awarding, it is not happening. Also, how many bids or the value have we submitted or planning to submit? How much are we looking from the EPC or HAM or any other segments? It would be helpful.
श्रवण जी, टोटल पाइपलाइन एनएचआई और मोर्स की मिला के लगभग 1,40,000 करोड़ की है. उसमें से लगभग 1,10,000 करोड़ के हैम प्रोजेक्ट हैं, एंड रेस्ट ऑफ द प्रोजेक्ट इज फ्रॉम द ईपीसी फ्रंट. नो डाउट अभी तक Q3 तक बिडिंग पाइपलाइन थी, लेकिन बिड डलना और खुलने का स्पीड काफी स्लो था, बट नाउ धीरे धीरे रैंप अप हो रही है. मोस्ट लाइकली Q1 तक जाते जाते ये पूरे बिड्स डल के और ओपन भी हो जाएंगे, एंड इंप्रूवमेंट दिखेगा Q4 में जाके.
Okay, so have we already submitted and awaiting the?
We have submitted 10-15 bids, and we are awaiting for the bid results.
Okay. Thank you and all the best, sir.
Thank you. The next question is from the line of Mohit Kumar from DAM Capital. Please go ahead.
Good evening, sir, and thanks for the opportunity. My first question is, what is the appetite for the orders, given that we have a very healthy order book, right?
Can you repeat the
My question is, are we desperate for order? Because given that we have a very large order book and that gives us a healthy visibility for FY24, so are we going all out, or are we being conservative in bidding right now?
Nice. We're not desperate in our orders because, like I said in my opening remarks as well, we had a target of about 10 to 12,000 crores of order wins, new order wins in this year. And we are near that number. So there is already a significant sort of, and the good part is if you look at our presentation, our order book is very, very from diverse sectors. So there is waters as well, there is metro as well, there is road as well. So all of them, we have a very diverse order book. And currently it's about 26,500 crore plus order book. So there is no desperation time limit, and there is a very strong and robust pipeline that is already the orders which have already been floated by the NHA and MOT, besides the other divisions that we look at, like, whether we're looking at water, metro, mining, all those have new orders coming in. And to add to that, we have a lot of comfort from the fact that the government has increased the budgetary allocation to infrastructure by 33% to getting it to 10 lakh crores. So, no, as such, fear from any sort. We are very in a comfortable place.
Secondly, sir, we have been executing a lot of irrigation, mining orders for last few years. How has been your experience or margin on the non-road orders? And are there any fixed price contracts in their basket?
Sir, our experience has been largely decent amongst the other sectors, which is why we have kept on improving and increasing our exposure to those sectors. The thought process when BBL first started off on this diversification exercise in 2015 or so was that as you were growing, as a growing and ambitious company, there were two types of things that we were doing. One was the geographical diversification, and the other was the sectoral diversification. We wanted to reduce the risk of being concentrated in one sector or in one geography. So that's why we did that. So today we are in 20 states when we are working in some 8 different sectors and getting very good revenue from all this. And roads, which used to be our mainstay, and almost 90% of our order book before then, or 100%, is now only 45% in an increasing order book. So we have, and the way we went about diversification was where we tried to do sectors which were either usually in close proximity to what we were already doing and required a similar kind of equipment. So the experience has largely been good. There might be some hits and misses along the way as we go into a new sector, but largely we've been satisfied with what's been happening, and we are optimistic about the increasing opportunities that will bring, that will continue to come in the coming years.
Lastly, on the Siarmal open cast mine, I think there was a media news saying that there's some issue with getting the land. How is the situation right now, and when can we expect the revenue booking from this particular project? Yeah.
Which project are you talking about, sir? Siarmal
open? Yes, yeah.
No, sir, Siarmal, the land has been acquired by the government already. And the appointed date is also already come on 2nd January. So I don't know what media reports or what things you're looking at. In the MDO process, in fact, I'm also very happy to say that typically MDOs takes 3-4 years of preparation time before revenue comes. We will start delivering revenue in this, hopefully in this quarter, and then going forward, we will have like a full-blown sort of, revenue. It will be adding a significant amount to our revenue year on year.
How much expect to mine, sir, in FY24 and FY25, if I get it?
Sir, in about 5 million metric ton is what we are targeting. That's what the government contract.
Understood. Thank you, sir. Thank you. Best of luck, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1 on your touchtone phones at this time. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Sir, DBL Infra date is the same 700 crore?
Yes.
Okay. And then we are not looking at right now in terms of 200-300 crore that option we have in terms of the increase.
Yeah, we have that option. Right now, we have no immediate plans to draw down on anything, but that option continues to be with us. In future, if we have any need at any point of time in terms of our investments we need to increase, we always have that option. But currently, we have no such plans.
Okay. And sir, in terms of the now, definitely Devendra sir has mentioned that bid pipeline is there and we are also looking at. But our internal expectation in terms of in next 2 months, how much more can we win in terms of the further orders? So for the full year, how much the number goes in terms of order inflow?
So in the next couple of months, we think about another 4,000-5,000 crores of orders will come in. So already till now, we have already reached about 10,000 crores of orders. So we will actually end up exceeding our guidance. So our target is about 30,000 crores as on 1st of April. So hopefully, and this is all dependent on how many orders the government opens up and all. But we are fairly confident that we are looking around that number.
Okay. And in terms of the across the board, in terms of the execution level and where I see in terms of the couple of HAM projects, 4 or 5 where appointed date is slightly getting delayed further versus the last time what we were expecting. So anything in terms of the land or anything issue on that front where we have not started, and wherever we are doing the execution, anything you want to highlight? Everything is going smooth. Any specific state or project where we are facing issue?
Naimesh, I always appreciate the amount of detail that you get into, and it always keeps us on our toes. The thing is that I don't foresee the execution is going good now. Obviously last 2 years COVID had really disrupted. We had exceptional rainfall as well that had happened in 2 years. So at least all of those disruptions have not happened as much. Execution is going good across. There is no big sort of disruption that I am foreseeing right now in terms of land acquisition. It's business as usual. We are also quite sad that we have not been able to take you guys on site visits for the last 2-3 years because of COVID. But hopefully in the near future we can continue that exercise once again and take you down to the site so that you can see the progress by your own sort of eyes. But right now, it's all business as usual.
Okay. Great to hear that. Thank you, sir.
Thank you. Participants who wish to ask a question may press star and 1 now. Ladies and gentlemen, if you wish to ask a question, please press star and 1. As there are no further questions, I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thank you all participants. We're looking forward to more questions, but I guess the presentation has a lot of detail. But in case any of you guys have more questions, please feel free to reach out to our team here at DBL or our investor relations team at Essential, and we'd be more than happy to address any and all of your queries. And I wish all of you a good end to the financial year, and I look forward to speaking to you on our Q4 call.
Thank you. On behalf of Axis Capital Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.